What if your first investment quietly destroyed confidence? Imagine losing money before truly understanding the rules. Many beginners step in with hope, but little clarity. The market feels exciting, fast, and full of promise, yet hidden mistakes often wait beneath that excitement. These mistakes silently shape future financial decisions forever. New investors rarely notice them until consequences appear. The journey begins with curiosity, but lacks direction. Everyone wants quick success without painful learning phases. That desire often leads straight into avoidable traps. Understanding mistakes early can protect your entire future. Today, we uncover the most common beginner errors. More importantly, we reveal how to avoid them. First mistake starts with chasing fast, unrealistic profits. Many believe investing is a shortcut to wealth. They expect quick returns within days or weeks. This mindset creates emotional and rushed decision making. Investors jump into trends without proper research first. They follow hype instead of analyzing real value. Losses come quickly when excitement replaces logic entirely. Smart investing requires patience, discipline, and long-term thinking. Wealth builds slowly, not through impulsive actions. Avoid chasing trends that promise overnight success stories. Focus instead on consistent and informed decision-making. Second mistake involves ignoring risk management completely. Beginners often invest all money into one opportunity. This creates unnecessary exposure to major financial losses. Diversification helps reduce risk across different investments. Spreading money protects against unexpected market downturns. Risk is always present, but it can be controlled. Never invest money you cannot afford to lose. Plan for uncertainty before expecting any possible gains. Third mistake comes from emotional decision-making habits. Fear and greed drive many poor investment choices. When prices fall, panic selling becomes very common. When prices rise, people rush to buy late. This cycle leads to buying high and selling low. Emotional control is essential for long-term success. Always base decisions on research, not feelings. Take time before reacting to sudden market changes. Fourth mistake is neglecting proper research and understanding. And beginners invest without knowing how assets actually work. They rely on tips from friends or online trends. This creates confusion and poor long-term performance outcomes. Learning basics builds confidence and smarter decision-making. Knowledge becomes your strongest tool in uncertain markets. Research companies, industries, and financial fundamentals carefully. Make informed choices instead of blind speculation. Fifth mistake involves unrealistic expectations about growth speed. Many expect constant gains without any temporary losses. Markets naturally move up and down over time. Patience helps investors survive difficult market periods. Accept that losses are part of learning process. Long-term focus creates stability and better outcomes overall. Avoid comparing your journey with others online. Everyone's financial path is unique and personal. Success comes from consistency, not sudden lucky moments. Build habits that support steady growth over time. Avoid shortcuts that promise unrealistic financial freedom quickly. Mistakes teach valuable lessons when approached correctly. Awareness transforms errors into powerful learning opportunities. Now you understand common traps facing new investors. Next, we explore deeper consequences behind these mistakes. These insights will strengthen your financial decision skills. Stay focused as we continue this important journey. Your future investments depend on what you learn. Every lesson here builds stronger financial awareness gradually. Let's move forward and uncover deeper investment truths. The next part reveals real impacts of mistakes. Prepare to see how small errors grow bigger, and these patterns repeat across many beginner investors worldwide, but you now have the chance to avoid them. Knowledge today prevents regret tomorrow in investing decisions. Stay curious and keep learning with each step. Your journey towards smarter investing begins right here. Small mistakes often grow into large financial problems. Many beginners underestimate the long-term impact of errors. One bad decision can affect confidence for years. Losing money early can create fear of investing. Fear then prevents future opportunities for growth entirely. This cycle traps many beginners in financial hesitation. Understanding consequences helps break this dangerous pattern early. Let's explore how each mistake creates deeper issues. Chasing profits often leads to repeated financial losses. Investors jump between trends without clear strategies. This creates instability and unpredictable portfolio performance outcomes. Over time, losses slowly reduce overall investment capital. Rebuilding confidence becomes harder after repeated failures. Discipline becomes difficult when emotions take control frequently. Risk mismanagement can destroy savings in a single move. Investing everything in one asset increases vulnerability greatly. Market drops can wipe out large portions quickly. Diversification acts like a shield against uncertainty. Without it, investors face unnecessary financial exposure daily. Emotional investing damages both finances and mental stability. Panic selling locks in losses permanently. For investors, fear prevents rational thinking. During critical market moments, greed pushes investors into overpriced opportunities too late. This combination creates a repeating cycle of losses. Learning emotional control is essential for stability. Lack of research leads to poor investment choices. Investors trust opinions instead of verified information sources. This creates confusion when markets behave unexpectedly. Knowledge gaps increase risk of making repeated mistakes. Research reduces uncertainty and builds stronger confidence levels. Unrealistic expectations cause frustration and disappointment quickly. Investors expect steady gains without accepting normal volatility. When losses appear, they feel discouraged and quit. This prevents long-term growth and wealth-building opportunities. Patience separates successful investors from unsuccessful ones. Time allows investments to recover and grow steadily. Quick decisions often lead to poor long-term results. Slow thinking improves accuracy and reduces unnecessary risks. Building habits takes time but creates lasting success. Each mistake holds a lesson if analyzed properly. Ignoring lessons leads to repeating the same errors. Reflection helps investors improve future decisions significantly. Tracking performance reveals patterns in personal behavior. Awareness transforms mistakes into valuable learning experiences. Financial growth depends on consistent improvement over time. Every investor starts with limited knowledge initially. Learning continuously creates stronger decision-making abilities gradually. Mistakes become stepping stones instead of permanent setbacks. Confidence grows when decisions are based on knowledge, and discipline strengthens when habits replace emotional reactions. Smart investors adapt instead of reacting impulsively. Understanding consequences helps prevent repeating harmful behaviors. Now you see how mistakes affect long-term outcomes, but knowing problems is only half the journey. Next comes learning practical ways to avoid them. Solutions will guide you towards smarter investing habits. These strategies are simple but require consistent effort. Anyone can improve with the right mindset. Investing is not about perfection but steady improvement. Avoiding mistakes creates stronger financial foundations over time. Your future depends on actions you take today. Learning now saves money and stress later. Smart decisions build confidence and reduce fear gradually. You are already ahead by understanding these risks. Keep moving forward with curiosity and discipline. The next part focuses on practical avoidance strategies. These tips will transform your investing approach completely. Stay engaged as we move into solutions next. Your journey towards success is becoming clearer now. Each step adds strength to your financial mindset. Mistakes lose power when knowledge replaces uncertainty. Growth begins when awareness turns into action steps. Prepare to learn how to invest smarter ahead. The next section provides clear, actionable guidance. Let's continue building your path toward financial success. Avoiding mistakes starts with building strong foundational habits. Smart investors focus on process instead of quick results. They understand success comes from disciplined decision making. First strategy involves setting clear financial goals early. Goals provide direction and reduce impulsive investment behavior. Without goals, decisions become random and emotionally driven. Define whether you seek growth, income, or stability. Each goal requires a different investment strategy approach. Clear planning creates confidence during uncertain market conditions. Second strategy focuses on consistent and gradual investing. Avoid investing large amounts all at once. Instead, invest smaller amounts regularly over time. This method reduces risk from market timing mistakes. Consistency builds wealth steadily without unnecessary stress. It also helps develop disciplined financial habits. Third strategy emphasizes learning before making any decisions. Knowledge reduces fear and increases investment confidence levels. Read books and follow trusted financial education sources. Avoid relying only on social media advice blindly. Strong understanding leads to smarter long-term investment choices. Fourth strategy involves creating a diversified investment portfolio. Never depend on a single asset or opportunity. Spread investments across different sectors and asset types. Diversification protects against sudden market downturn risks. It balances potential gains with controlled levels of risk. Fifth strategy focuses on controlling emotions during volatility. Market fluctuations are normal and expected over time. Avoid panic selling during temporary market declines. Stay calm and stick to your original strategy. Emotional discipline separates successful investors from beginners. 6. Strategy encourages long-term thinking and patience. Wealth building takes years, not days or weeks. Ignore short-term noise and focus on bigger picture. Time in market matters more than time in market. Patience allows investments to grow and recover naturally. 7. Strategy includes reviewing portfolio performance regularly. Check progress without reacting to every minor change. Adjust strategy only when necessary and well-reasoned. Avoid frequent changes based on short-term market movements. Stability improves overall investment outcomes over time. 8. Strategy involves managing risk carefully every time. Always assess potential downside before making decisions. Understand how much loss you can tolerate emotionally. Risk awareness prevents major financial setbacks. Unexpectedly balance risk with realistic expectations for returns. 9th strategy is avoiding comparison with other investors. Everyone has different goals, timelines, and risk tolerance. Comparing results creates pressure and poor decision making. Focus on your own journey and progress steadily. Personal discipline matters more than external performance comparisons. 10th strategy involves staying informed about market trends. Awareness helps investors adapt without reacting impulsively. Follow reliable sources for financial news and updates. Avoid reacting instantly to every breaking headline. Information should guide decisions, not control emotions. 11th strategy emphasizes building an emergency financial cushion. Never rely entirely on investments during emergencies. Keep separate savings for unexpected life situations. This prevents forced selling during unfavorable market conditions. Financial security improves confidence in decision-making ability. 12th strategy encourages continuous learning and improvement always. Markets evolve and investors must adapt accordingly. Learning never stops in successful investment journeys. Mistakes become valuable lessons when analyzed correctly. Improvement builds stronger habits and smarter decision making. Applying these strategies reduces risk and increases confidence. Small, consistent actions create powerful long-term results. Success depends on discipline more than intelligence alone. Anyone can become better with patience and effort. You now have tools to avoid common mistakes. Next, we explore real-life scenarios and lessons. These examples will deepen your understanding further. Learning from others prevents repeating costly mistakes yourself. Stay focused as we continue this valuable journey. Your path towards smarter investing becomes clearer ahead. Real-life experiences often teach stronger lessons than theory. Many investors learn only after facing painful losses. Stories reveal patterns that numbers alone cannot show. Consider a beginner chasing a trending stock blindly. Excitement drives the decision without proper research first. Prices rise quickly, creating a fear of missing. The investor buys at the peak price level. Soon after, the market corrects sharply downward. Panic sets in, leading to a quick sale. Losses become permanent due to emotional reactions. This story repeats across markets worldwide consistently. Lesson learned is avoiding hype-driven investment decisions always. Another example involves putting all money together. A beginner invests everything into one promising company. Initial growth builds strong confidence and excitement quickly. Suddenly, unexpected news impacts the company negatively. Stock value drops significantly within a short time. The portfolio suffers major damage due to concentration. Recovery becomes difficult without diversification in place. Lesson here highlights importance of spreading investments wisely. Consider an investor ignoring basic financial education completely. They rely on random advice from online communities. Conflicting information creates confusion and poor decisions. Investments are made without understanding underlying fundamentals clearly. Performance remains inconsistent and often disappointing overall. Over time, frustration leads to quitting investing entirely. Lesson emphasizes learning before risking hard-earned money. Another situation shows emotional reactions during market downturns. Prices drop and fear spreads quickly among investors. A beginner sells everything to avoid further losses. Later, markets recover and reach higher levels again. The investor misses potential gains due to panic. Regret follows, reducing confidence for future opportunities. Lesson teaches patience during temporary market fluctuations. One more case involves unrealistic expectations about returns. A beginner expects profits within very short periods. When gains do not appear, disappointment grows quickly. They jump between investments, searching for quick success. This behavior increases risk and reduces stability significantly. Consistency becomes impossible without realistic expectations in place. Lesson highlights importance of long-term perspective always. These stories reflect common beginner mistakes clearly. They show how small errors lead to bigger consequences. Each mistake carries a valuable lesson for improvement. Observing others helps avoid repeating similar errors yourself. Experience becomes less costly when learned indirectly first. Smart investors study patterns before making decisions. They learn from both success and failure stories equally. Awareness transforms fear into confidence over time. Real life lessons create stronger understanding than theory alone. Applying these lessons builds better financial habits gradually. Every story adds depth to your investing knowledge. Patterns become easier to recognize with experience. Recognition helps prevent mistakes before they happen again. This is how smart investors stay ahead consistently. They prepare instead of reacting under pressure situations. Preparation reduces emotional decision making significantly over time. Confidence grows through learning and practical application daily. Mistakes lose power when lessons are understood deeply. Your mindset determines how you respond to challenges. Strong mindset supports better financial decision making consistently. Now you understand how real situations unfold clearly. The next step is building your personal strategy. A clear plan turns knowledge into meaningful action. Strategy helps maintain discipline during uncertain market periods. Without strategy, mistakes can easily return again. You are now better prepared than most beginners. Continue learning and refining your approach carefully. Growth comes from applying lessons consistently over time. The final part will bring everything together clearly. It will guide you toward a confident investing mindset. Stay focused as we approach the conclusion. Your journey toward smarter investing is nearly complete. One final step remains to strengthen your foundation. Let's move forward and complete this transformation. Everything now comes together into one clear vision. Investing success depends on mindset more than strategies. Knowledge matters, but discipline matters even more. You have seen mistakes and learned how avoiding works. Now it is time to build lasting confidence. Confidence does not come from luck or guessing. It comes from preparation, patience, and consistent action. And start by trusting your learning and growing process. Every investor begins with uncertainty and limited understanding. Progress happens when you continue, despite early mistakes. Avoid perfection. Focus instead on steady improvement always. Small improvements lead to powerful long-term results eventually. Stay committed even when results seem slow initially. Growth takes time, and patience rewards disciplined investors. Build a routine that supports consistent investing behavior. Regular investing creates habits that strengthen financial stability. Habits reduce emotional reactions during uncertain market situations. Consistency matters more than timing perfect opportunities exactly. Focus on actions you can control daily. Ignore things outside your influence and stay focused. Develop a mindset that accepts both gains and losses. Losses are temporary. If your strategy remains strong, do not fear losses. Learn from them instead. Learning transforms setbacks into stepping stones towards success. Keep emotions balanced during both success and failure. Success can create overconfidence if not controlled properly. Stay humble and continue following your strategy consistently. Confidence grows when discipline replaces emotional reactions fully. Surround yourself with reliable financial knowledge sources. Avoid noise that creates confusion and unnecessary doubt. Stay focused on long-term goals instead of distractions. Clear focus helps maintain direction during uncertain periods. Revisit your goals regularly and adjust if necessary. Goals evolve as your knowledge and experience improve. Keep learning because markets continuously change over time. Adaptation is essential for long-term investing success always. Never assume you know everything about investing completely. Curiosity keeps your approach fresh and informed constantly. Reflect on your decisions and learn from outcomes. Reflection strengthens awareness and improves future choices significantly. Track your progress to stay motivated and focused. Progress tracking builds confidence and reveals improvement clearly. Celebrate small wins to maintain positive momentum consistently. Motivation helps sustain effort during challenging market conditions. Avoid comparing yourself with other investors unnecessarily. Your journey is unique and requires personal discipline. Comparison leads to pressure and poor decisions often. Stay committed to your personal financial path always. Discipline, patience, and knowledge form a strong foundation. This foundation supports long-term financial growth effectively. You now understand common mistakes and their solutions. You also know how to apply practical strategies. Most importantly, you have built a stronger mindset. This mindset will guide your future decisions wisely. Investing becomes easier when fear no longer controls actions, confidence replaces hesitation as knowledge continues growing steadily. Remember that success is a journey, not destination. Each step forward brings you closer to goals. Stay patient, stay focused, and stay consistent. Always, your future financial success begins with actions today. Every smart decision builds a stronger financial future. Avoid past mistakes and continue improving your approach. You are now better prepared than most beginners. Keep applying what you learn in real situations. Growth will follow naturally with consistent disciplined effort. Never stop learning and refining your strategy further. Confidence grows stronger with each smart decision made. The journey ahead is filled with opportunities and lessons. Stay curious and embrace continuous improvement fully. Your investing future is now in your control. Take responsibility and act with clarity and purpose. The knowledge you gain will guide you forward. Keep building, keep learning, and keep improving daily. This is how successful investors are truly created. Your journey begins now. Make it count wisely.